Tell me a little bit about complexity. So current leasing has its own complexity levels depending upon what your area you're in. How would you judge the complexity today versus the complexity we may anticipate in the new standard?
So on the surface, I think it's a lot less complex than what we have today in the prescriptive rules. So, however, I do think there's going to be some key judgments that may be complex, the primary one being around the embedded lease discussion. And so evaluating the full breadth of your contracts that may not be papered as a lease to determine whether they contain a lease. And that becomes a much more important analysis because of the balance sheet presentation of the leases. And so there's a lot of judgment there. It's very facts and circumstances. I've looked at a variety of IT contracts, and they're not all the same, and it could drive different decisions. And so that's where I personally think there will be quite a bit of complexity in making that evaluation. I think once you get your population of leases, it really just becomes a bit of a present value of your lease payments and putting that on balance sheet, as well as some key judgments ongoing around modifications and when do I have to reassess. And those are things that, at least from a reassessment perspective, companies didn't have to do today. Today it's a set it and forget it until you actually make a modification or you exercise a renewal. You really didn't have to do much. But now under the new standard, there are kind of periods where you may have to reassess. For example, if facts and circumstances change and you now plan to use the asset for longer than you originally intended.